What is the optimal combination of salary and dividends? How you can be more tax efficient? When is the best time to register a limited company? The answer to your question is, as an influencer or content creator, it is likely that you have started your journey being a self-employed as a sole trader. In this video, we have covered 4 major tax planning components. Tax planning for content creators operating as a limited company. If things are going well and more money starts to come in, it might be time to think about how you can be more tax efficient. As an influencer or content creator, it is likely that you have started your journey being a self-employed as a sole trader. I have published a separate video for tax planning operating as a sole trader or self-employed. So far, you have been paying tax in a similar way as you were employed, both PAYE, pay as you earn, or income tax and national insurance contribution. However, it is important to recognize that when the financial success gets to a point where it is advisable to register as a company. So now, once you set up a limited company, it's time to do a tax planning. The first thing you must consider is obviously your optimal remuneration package. When you decide on your optimal remuneration package, you must consider 2 things, or you must take care of 2 things. Before moving forward, I have recorded a separate video on optimal remuneration package. It's for employees, but you will get the message. Here in the UK, there's a double taxation. The first one is PAYE, pay as you earn, and the second one is national insurance contribution. The following components you can consider in your remuneration package on which you don't have to pay any PAYE and national insurance contribution. Salary, if you are paying yourself $758 per month, obviously I don't recommend you pay yourself only $758 per month. You barely survive with this income. However, by the end of video, you will understand, because here where the tax planning comes in. Secondly, don't just consider financial aspect of your remuneration package. Non-financial components like work from home, work-related training and courses, staff entertainment. Again, I have recorded a video on staff entertainment, link is up there. Car parking, outplacement counseling are also help to make your remuneration package healthy. These are just a few examples. As you climb your success ladder, company performance will improve and you can add more components into your salary or optimal remuneration package. As I earlier mentioned, I have recorded a separate video on remuneration package. You will find a link up there in which I have covered 22 components of optimal remuneration package, including financial, non-financial and executive benefits. It's worth watching and I am 100% sure it will add a value. So before moving forward, let's set a foundation for next point. Let's say you are planning to take 50,000 salary per year. Following national insurance contribution and PAYE, you will have to pay on this. Now on your face of screen, you can see the PAYE will be 7,484 and national insurance will be 8,638.60, which is the combination of 2,994.40 plus 5,644.20, both employee national insurance and employer national insurance. As a director of a company, you or company will be responsible for paying national or employer national insurance. So now, once you understand salary, the next question people ask is there any way to pay less tax to withdraw money from company? And the answer is, of course, there is a way to extract a money, and the extraction of money from company is called dividend. In current tax year 23-24, dividend allowance is £1,000 on which you don't have to pay any tax or national insurance. However, it will be reduced to £500 in next tax year 24-25. Yes, I understand you won't survive with 1000 dividend. However, here where the next big question people often ask: what is the optimal combination of salary and dividends? Before answering to this question, let's have a look on three scenarios. Scenario 1 is obviously salary, as we discussed in point 1. You must consider PAY and national insurance contribution. On your face of your screen, you can see the same figure of income tax, employer and employee contribution, as well as the salary of £50,000. Number 2 is dividend. In the second scenario, we will consider if we declare dividends of 50,000, what will be the tax implications in this case. So in terms of national insurance contribution, you don't have to pay any NI on dividends. However, you must pay income tax, which you can see on your screen. Dividends from UK companies are 50,000, and then after deducting a personal allowance of £12,570, the basic band rate is £37,430, and the basic band rate or the tax-free band rate or the allowance for dividends are 1,000, on which you don't have to pay any tax, which is 0, and then £36,430, on which you have to pay 8.75%. So the total income tax you have to pay is 3,100. It's 7.62. So the total tax savings, if you only pay yourself dividends, are 5,450.98, which is a combination of 8,638.60 coming from the last point minus 3,187.60, which is a current tax. Now scenario 3, which obviously we all are waiting for: what is the optimal combination of salary and dividend? The optimal salary I chose is £9,100 per year, equal to 758 per month, and the dividend amounts I chose is £40,900 per year. So the total income will be 50,000 per year. On your screen, you can see the taxes as per scenario 2. However, the disbursement of money into your account will be slightly different. The reason why I chose this is you will be in employment contract, so we'll get all employment related benefits that we had discussed in optimal remuneration package section. Second, the big tax advantage is salary is allowable expense for corporation tax purposes. So on 9,100 you will save corporation tax of £1,729. So the actual benefit of this optimal combination will be 7,179.98, which is the combination of 5,450.98 plus 1,729, and then you can see the calculation of 8,000 coming from the first point and 3,000 coming from the second point, 3,187.62 coming from the second point. Thanks me by like, comments and subscribe please. Now, once you understand salary, dividends and optimal combination of salary and dividends, it's time to plan for a future. In retirement planning, pension plays a vital role. So our next component is pension contribution. Fasten your seat belt please. One of the biggest advantage of contributing into your pension pot through your limited company is it is allowable expense for corporation tax purposes, as well as contributing over the time will help you to increase your pension pot, as well as it will grow your pension pot. It's like achieving two things with one action. So now let's have a look how much tax you will save by contributing into your pension pot through a company. The first scenario on your screen, you can see net taxable profit for the year is 70,000 and your corporation tax bill will be 14,437.87. Now by considering the current pension allowance, which is 60,000 for 23-24 tax year, you have contributed this into your pension pot. Now let's have a look at corporation tax calculations. You can see, so the corporation tax liability is just £1,900. This is because 70,000 we have contributed 60,000 into pension pot and left only 10,000 net taxable profit. So now it's time to calculate total tax savings. So the tax savings are 12,537.87, which is a combination of 14,437.87 minus 1900. This is where you achieve two things. First, you contribute into your pension plan, which obviously helps you on your retirement. Secondly, you have saved £12,537 in your tax bill. This way, you have achieved two things. First one is you have contributed 60,000 into your pension pot. Secondly, you have saved £12,537 in tax savings. The final one is claim all your expenses. Content creators sometimes even don't know what expenses they can claim. So for this purpose, I have uploaded a separate video on sources of income as well as all the allowable expenses that you can claim, which helps you to reduce your tax bill. You will find a link up there. Just a quick recap here. From your camera gear to advertising or promotional campaigns to your laptop, all of these expenses are allowable expense, which helps you to reduce your taxable profit and then your tax bill. Now coming back to the original question, when is the best time to register a limited company? The answer to your question is the best time to set up a limited company is when your profits are 45,000 to 50,000 per year and you are expecting 10,000 to 15,000 or even 20,000 net profit in next 3 to 4 months, which means at the end of the year your profits will be 60,000 to 70,000 per year. To explain this more in detail, I have recorded a separate video on difference between operating as a self-employed or as a limited company, which you will find next Sunday at 5 p.m. British Summer Time. Overall, in this video we have covered 4 major tax planning components, including optimal remuneration package, dividends, pension contributions, and finally claiming all allowable expenses. In next video we will explore the difference between operating as a self-employed and as a limited company. So until next time, please keep me posted and ask your burning questions down in the comment section, and I will try my best to answer and provide your questions a solution best of my knowledge and understanding. As always, hand ahead, salute until the next video. A quick disclaimer as always, this video is only for UK content creators, since tax rates and policies that I have mentioned in my videos are as per HMRC guidelines. However, the overall content will be same no matter which part of the world are you from. But yes, tax rates will be different, and obviously tax information, tax rates that I have used are best of my knowledge and understanding. And yes, it's not an advice, it's just a small lamp internal.